All right, Tuesday morning, we took two trades back to back. I'm going to explain to you the good, the bad, the ugly, what works, what doesn't, some tips on how to manage these trades for the best outcome. Let's get right into it. I'm not going to waste any time. All right, so earlier today, about let's say 10 o'clock, we do have live classes. So some of you may have seen these trades during our live training. We have the Trade Scalper, I have the roadmap. I also can add the Atlas line and the blueprint and the at the open, but I'm just going to focus on the Trade Scalper and the roadmap. The reason is we have a lot of traders with funded accounts. Most traders that have the funded accounts, they're using the combination of the Trade Scalper and the roadmap as well as the Atlas line. So I'm just going to focus on what works here for the funded traders. I'm going to keep it really simple. There are two signals here on the chart. One is a long, that double wick long that happened at about 10:30. That was obviously a losing trade, but the way we manage that is going to be based on 4 to 5 bars that have plotted, have not provided a profitable, let's say, move, close the position. So when I look at managing the trade, especially a trade like that where it told us to go long, leading me up to the roadmap, obviously it didn't work, but I can still get out of the trade at a break even or a very small loss. That's really important to manage your trades. Now we have another trade here that I just entered short, which is the Trade Scalper double wick short. Now I'm going to explain to you exactly why I'm doing what I'm doing. The market tends to gravitate towards the roadmap. The roadmap are those shaded zones. Once it lands in the roadmap, I am going to make a decision whether or not to see it go through the roadmap or if it reverses. So in this case, it's leading me down to the roadmap. This is a really good thing because since I know these are magnets, I want to make sure that I enter on my way down. Just like I wanted to enter on my way up to the roadmap in the previous trade, I want to enter on my way down. So that's really important. The entry is based on the Trade Scalper, so the Trade Scalper signal is a double wick short. The Trade Scalper gives two signals, the main signal and the double wick signal. So we have a double wick signal. So everything's really clear to me. The last thing that I want to mention is managing the trade. Typically 4, 5, 6 bars. If they occur and I'm not in a profit territory, I'm at break even or a small win or a small loss, really consider closing the position and then moving on to the next trade. The market's kind of slow. I mean, it's at 2 points, 1 3/4, 2 points. Look down at that ATR, that orange line at the bottom there. That's called the average true range. That tells me the current conditions that exist. If the market's at about 1 3/4, 1 1/2, 2 points, great. I know exactly what I can achieve on a trade like this. All right, there's another signal. That doorbell that you heard is an audible alert. The audible alert indicates that we have another signal. All the DayTradeToWin software have text alert as well as audible alert. The defaulted sound is a doorbell, which you just heard. So if your dogs are going crazy as the doorbells are ringing, you can change those sounds very easily. Now, there's two signals here to go short, double wick, as well as a main signal to go short. I'm already short, so consider this for a moment. There's no reason why I should re-enter or add my position short. Now, if you didn't take the double wick short on the Trade Scalper and you have this now new opportunity on the main signal, great. That's a whole different story. Take the Trade Scalper short based on this main signal now being generated. All right, so out of the trade, a very simple trade, about 2 points. I mean, it doesn't get any clearer than this. There was a signal on the Trade Scalper leading me down to the roadmap. I have a target. I have a stop. That's very important. Always have a target and always have a stop. And always manage the trade with 3 to 5 candles. See where we're at. If we're at about break even, small win, small loss, I think it's always a good idea to shut down and close that position and look for a new one or at least tighten up the stop. Because the longer you are in a losing position, the harder it is for it to recover. I've seen it all the time. I think that most trades, if they go in your favor immediately, that's 90% of the time where you're going to be successful. The trades that hang and just go against you or take forever to do anything, those are the ones that are typically losing trades. So really important, manage your trades. And remember, not every trade is going to be a winning trade. There are plenty of trades that are going to be break even, small wins, small losses. In this case, we had a great double wick as well as a main signal leading me down. There's one more trade that I want to take. Let's get right into it. All right, so here we are about 15 to 20 minutes later, still using the E-mini S&P, and we have the Trade Scalper long 55.29. So we have another signal here. This is a long signal. Now I see that this is happening right at a roadmap level, right? Zone A up, that is a roadmap. So the software, the roadmap is indicating to us, part of the software is saying, be careful, we may have a reversal. So we're not going to go long just yet. The goal with using two or combining methods is to say, do we have anything that is conflicting? So the Trade Scalper is telling me long. The roadmap is indicating be careful, only go long once it breaks through it. So you can see that I've added a stop order above the roadmap. So the reason why I've done that is because if it breaks through that roadmap zone, indicating that that zone is no longer valid, that resistance is no longer valid, there's no manipulation here at this area, great, I can now continue to go long based on the Trade Scalper signal. So you see how I'm using multiple methodologies that are unrelated, that's the key, unrelated, to say go long or go short. So just because you have a signal here to go long on the Trade Scalper doesn't mean to just jump in long. And it would have been, maybe it would have been good. Maybe it would have been a profitable trade up until now. You can see that's continuing higher. But I'm going to wait. I'm going to wait until it breaks through higher, through the roadmap zone in order for me to go long. Now, if it doesn't, and instead it's reversing, or if it turns around and begins to go south, I'll have another signal, which could be the Trade Scalper, or it could be the roadmap, and that way I can say, all right, going long is wrong, and now I'm going to cancel this position and I'm going to go short. So I have a lot of things here happening. We do all this in the live trading room. So if you're a part of the DayTradeToWin family, have access to that live trading room where we explain, as this is happening live, why you should go long, why you should wait, why we should filter, is anything conflicting, is anything going against us, is it confirming? That's really important. So you see, I'm ready to go long if it breaks above that roadmap zone. My entry is there. I'm ready.
Order canceled.
But if it doesn't, that means that it's not meant to be. There'll be a signal
Order
instead
filled.
to go short. And you can see that's exactly what happened. The roadmap gave us a signal here to go short. There's the text and that audible alert as well, doorbell, or any other sound that you want to hear, which indicates now that there's a short signal. So as a trader, I canceled my long position. I went with the roadmap, signal short, and now I have a perfect setup of waiting for the market to either go down and hit my target, or if it reverses and goes up, there's my stop right above the zone. It's really cut and dry. It landed in the zone. I waited to go through the zone before going long. Didn't happen. Instead, it's tailoring off, hitting resistance, and now reversing. Now I'm going short. So we try to make this really clear what to do. Now, if this trade takes half hour where nothing happens, it goes sideways, there's no target, there's no stop, manage the trade accordingly and get out of the trade. Again, not every trade is going to be a winning trade. What matters is where's the stop, the percentage of accuracy, how far away and how long it takes for the target to be achieved, and if there's anything conflicting. That's how I always approach every single trade, and that's how we teach our traders. If you are interested in the roadmap or the Trade Scalper or the Atlas line, the At the Open, the Autopilot, we do have a package called the Accelerated Mentorship Plus. Now, a lot of traders, they start off with the roadmap and then they upgrade to mentorship, which is great.
Target
So
filled.
if you're interested in any of the software, you can buy them separately, or you can get the entire package, which is discounted. So we try to give you a discount when you buy the entire package and you join the live trading room every day. Like I said earlier, most of the trades that are successful have something in common. Within the next 3 to 4 bars, you should be in a profit scenario. If not, consider getting out of the trade. It's just good trade management in order to alleviate those stops. If you have any questions, visit DayTradeToWin.com. Get a free member account if you don't have one already. Check out the links in the description below. We have a lot of free stuff for traders, and join our family every day in a live trading room. You can get access to how to trade, price action. The videos that are upcoming will show you exactly more of what you need to learn when it comes to day trading. My name is John Paul. Until next time, good trading.